This is Rod Kusin, Spoon for Risk for December 19th. It is a Monday in 2016. We're going to look at a few very high probability trades as forecasted by the premium. Now, in particular, we're looking at a 5-second chart. So this is really accurate. And you saw how the market was moving down into the 9 o'clock hour. And the premium was continuing to drop. It rallies up here, so a good opportunity to short the pivot here at 2260. And then it comes down again, and we get a lower level on the premium. So, indeed, you're looking to either hold the trade as a short or get into the short, one of the two. When we come over here to 2258, we get an even lower bar on the premium. So everything is telling us that this market is going to be coming down, if it isn't already coming down. But you don't know that. So if you're short, you're going to hold that. If you're not short, you're going to look for an opportunity to get into a short. So we'll just presume that we're looking for the opportunity to get into the short. Now we have a little higher level on the premium shown here, but lower, a little bit of a divergence here at a higher price on the premium. So every reason to short that, but it doesn't work. Now you don't lose anything on that trade. You have every opportunity to tighten the stop and break even if nothing more than that. And then we go a little bit higher, and we get another divergence on the premium. So once again, we're short, but it still doesn't work, and we're still climbing up. And there's really nothing in here, nothing that we can obviously find that is telling us, well, where is the top here? Now, we'll show you a couple of things in just a minute that may have been helpful to identify that. But in any case, so we move up a little higher, and now we've got another divergence on the premium. It's not much, but there is more divergence here. We're now below 368, and you short that, and even that doesn't quite pull it. But there's no doubt about the fact that this thing is coming back. Now, it's 942. Okay? Now, you all know what happened in the news this morning. So, you short it again, and hopefully this is going to work this time. But as we come down, we come to this pivot point, and you see the premium has moved up again. And then it's moved up even higher. So you know something's not right here. It's still not ready to go down. And we finally get to this point here. You've got another divergence on the premium, and we short it again. You just have to keep trying. Now manage the trade. Just watch where the premium is telling you this market is going, at least temporarily, and you're not going to go wrong in your reaction. You're either going to tighten the stop so that you break even, or take a little money off the table and average in. But from 62.75 to 63.75, you're doing a fair amount of averaging. So better to just wait for another opportunity. Well, you get that opportunity here, and finally it works. And as you can see, it comes back down to 2258 as forecasted. And it doesn't take very long, because this was after the news really broke regarding that assassination of the Russian ambassador in Turkey. So I'm going to guess this is pretty much news driven. Now, as the market comes down, look at what you've got going here. Premium is moving higher, higher, higher still. You got just the opposite situation going on here, and the premium is really forecasting a return to 61.25. So when you get down here to 58, where do you stand? You're still lower on the premium here. looking at every pivot in here, you're still lower. So this really isn't a good time to go long. So let's take this a little bit further. Now, we do go lower in here, and we've got a pretty significant divergence there. So you may have attempted to go long here, and as we know, that doesn't quite work. Here's another opportunity to go long, and still, you know, it still isn't working. So we got just the opposite of what was happening before. Now, if you had any kind of a market profile, you knew that 2256 was a very obvious place to go long. 2256.50, that's a real obvious number. So good reason not to jump the gun until we get down in that neighborhood. So here's really your first opportunity at 56.50. And then we do get a little bit lower. We go to 56, and that's in fact where we get the pivot. And we do see some divergence in here. So you're going to measure where the premium was here. The premium at this point on that pivot was really quite high, much higher than it really needs to be. And so as long as you're above these levels down here, particularly right around 427, that's a pretty good place to base your divergence off of. So in any event, at 415, nothing really there to worry about. And so you take this, you see a little bit of a drop here. Market does come back down to 56.50, and now you're back up there on the divergence, and away you go. So this, as it turns out, takes you all the way back to 61, but into the noon hour. It takes a while for you to get there. And then another big slam on the premium, back down to 22.58 right here, and that's leaving us with the naked bar, which as you can see gets filled almost immediately thereafter. So another opportunity. took considerable period to move up to 61, only to move right back to 58 over here. So there was another opportunity, and very obvious trading. Premium can help. If you don't know how to read it, it's a good time to learn. I'm Rod Kusin, Spoon for Risk.